in some of these price points, there are mortgage programs and incentives that kick in when times are hard.
2 years ago, they were giving out interest rates that were 2.5%, 3%, that you could buy a very now expensive house and still have a very low payment.
Well, what's up, Jordan?
What's
We're back.
up? I'm back. Special guest appearance.
Special guest.
Yes.
Feels special, not so special?
Sometimes. Today I do.
So we're going over the Birmingham market update for the month of March.
Yeah, I'm stoked.
What'd you think of March? Was it good for you? Bad for you?
It was okay. It was a little bit slower than normal, but I still think that's rate driven. But for the most part, it was pretty good.
Well, the stats say that it was a little slower than last year.
Yeah,
So.
yeah. We looked at those earlier. There's some on there that are very surprising.
You know what is also surprising in the midst of it was the lack of inventory. So it's lower. Yeah, still. It's lower.
I don't know how you get out of that. There comes a time, I don't know if you do get out of it. I don't know how it happens.
Yeah, I mean, new builds need to definitely come online. We're going to touch on areas where there is a lot of new builds and how it affected actually appreciation. We're theorizing.
We don't know.
But yeah, let's just jump into the numbers and
Sure.
let the numbers tell us what the market's doing.
Yeah.
So in listed in 2023 was 2,184, and in 2024 was 2,105. So we're at a negative 3.62% unlisted. So not dramatic, but definitely significant lower. Now, I thought what was interesting is the sold is actually even lower percentage-wise. So in 2023, we had 1,631 sales. 2024, 1,491 sales.
Wow.
So it's almost a 9% negative in sales.
That's incredible.
Which, going back to rates, they're higher now.
That's part of it. I mean, I'd say that's the biggest part of it.
Yeah.
There's too many people that are rate locked.
Explain rate locked, like that idea or that concept.
It's something that 2 years ago they were giving out interest rates that were 2.5%, 3%, that you could buy a very now expensive house, even then somewhat expensive, and still have a very low payment. I mean, I think the last house I bought in Trace Crossings was $370. And I had a 2.5% interest rate amortized over 30 years, so it was like $1,700 a month in payment. You could not rent that house, buy that house, find that house for $1,700 a month.
Anywhere close to it.
Not even, I mean, we're in something somewhat comparable now, a little bit bigger, a little bit more costly, but I mean, that payment is, $4,500. You're talking about over double payment.
Yeah.
For not the same thing, but somewhat similar.
Yeah, it's a big jump. So effectively, it's doing two things. Number one, it's allowing less buyers to be on market.
Correct.
So that's why the solds are down.
Mm-hmm.
Even though there was a basically 3.6%, listed, it was negative almost 9% on the actual sold. So it's locking the buyers up.
Mm-hmm.
But then on the flip side, too, it is still bringing listings down because there's a lot of people who say, I could move, but what would I buy? And how could I even afford it?
How could I?
So they could afford this house at 3% or 4%, but they can't afford it at 7%.
Exactly.
So,
And maybe even 5%. I mean, there's a big difference over a 30-year AM of what 2% can do to that.
So it's certain people who have to move or have to shake it up will, but other
that's what
people
we're seeing.
aren't. So,
I think that's what we're seeing right now in the housing market in general is people that have to move.
Are doing it.
Yeah.
So median sales price 2023 was $268,000, and in 2024 the median was $279,699. So that's an appreciation of 4.37%, which is pretty on trend.
Yeah.
Last month we were actually at a 10%, and let me look at January. January we were at 6%. So it's a strong appreciation level.
Yeah.
I think overall.
Yeah, I don't want to see it jump back over 5% again, really, because I feel like the other pieces to the market don't allow for that to be helpful to people, I guess, if that makes sense.
Right.
Like you've got all this equity in these houses in theory, right? Because of large appreciation gains, but then you're still stuck with a rate lock. So,
Right.
You've got $100,000 worth of equity. Great. Where are you going with it?
HELOC it is pretty much all you can
that's
do.
literally all you can do. Right?
Yeah. So list to sales price, 2023 was 99.54. Not much change. 2023 was that. 2024 was 99.52. So almost exactly the same. Average days on market, 37 to 43. So 16% change there. And median sales, 9 to 13. So a 44% change there. So stuff staying on market longer.
Yeah.
And, overall, I would say that rates are pretty much just dictating the market now.
They're dictating, which is what the Fed wants to do. I mean, that's the only lever they have to pull in controlling markets.
Yeah. So last month we broke down specific areas, and I think this is a very good insight into different markets and different price points, because we can say these bigger overall scopes, but breaking down into specific areas. And these are kind of based upon, price point, similar price points, if that makes sense, or similar school districts of, level. So let's start with Mountain Brook, Vestavia, Homewood. So listed was 143 in 2023, and in 2024 is 138. So down, negative again, almost 3.5%. Sold in 2023 in Mountain Brook was 101. Mountain Brook, Vestavia, Homewood, 101, and in 2024 it was 129. What I thought was interesting, I accidentally just pulled Mountain Brook stats before I included Vestavia, Homewood.
Yeah.
There were 34 listings listed and 34, all of them sold. So,
location.
Yeah, so Mountain Brook's not doing too bad.
No.
If you list it, you're selling it, basically.
I don't know what the list price to purchase price ratio is for those 34, but I imagine it's very close to or over list price.
But I thought it was interesting. So in 2023, we have 143 listed, but only 101 sold. So there's a 42 house difference in 2023 when rates were a little better, actually.
Yeah.
In 2024, 138 to 129.
That's
so it's the shift there. More houses were sold that were listed. So thought that was interesting.
That is interesting.
So stuff is moving more effectively, basically, in these pockets. So median sales price $549,000. And in 2024, it's $589,000. So 7.45% appreciation.
That's pretty good.
It's pretty strong.
That's pretty strong. It's just crazy.
And last month, I think it was even higher. It was the median was 16%.
Golly.
So February really was, in a couple different areas, pretty strong.
The Fed's doing everything they can do to shut this thing down, but sometimes that train's just on fire and you can't stop it.
You can't stop it. That's what happens when you put trillions of dollars in the market.
In the supply. Yeah, it's got to get sucked up somewhere.
All right, Hoover, Trussville. So you asked me why we can kind of compared them. I think school districts are semi-similar.
We talked about that, yeah.
And prices, when I pulled them separately, the median price was about the same. So I think it's a good comparison. So in 2023, 262 houses were listed. In 2024, 236. So once again, a negative almost 10% in listings.
God, these people just can't move. I feel sorry for them. I want to help them move, but they're just unable to, it seems like.
Really, supply is still very low, and that's what the numbers are saying. Solds, 2023 was 200. 2024, 174. So negative 13%. So still trending exactly alongside the other.
Well, I moved, so I did my part.
You were your part.
I did what I could.
Median sales price $369,000, $369,000, and in 2024 is 404. So that is a 10% increase. Or sorry, 9.335. I rounded up. I like to be liberal with Hoover and Trussville.
With the appreciation, just going round up. I like that.
Higher than Mountain Brook.
Which is a little scary. It's a little scary.
Well, I wonder if some of that has to do with like you're already at a pretty high price point.
Yeah.
So there's a little bit of a ceiling.
There has to be because there's only so many people in Alabama that can afford a $600-something house.
But I mean, the month before it was at 16%. So, I think also the pools of data can just fluctuate sometimes.
When you're talking about 148 houses on market, it only takes $1, $2, half, $3 million house that even then still skews the median somewhat.
Yeah. So average days on market went from 17 to 28 in 24, and median was 3 to 4. So not a crazy increase there, but I think I like the median better, and that says that for the most part in both Mountain Brook and Vestavia Homewood and Hoover and Trussville, if you have a good house, it's going to be under contract probably within the first 4 days.
No doubt. Absolutely no doubt. Some of these houses I see, it's like all you need. I mean, we always say carpet and paint, but some of them, literally, that's all you need.
Yeah.
And the house wouldn't be sitting there for 35 days.
Yeah.
And then take a loss.
Take a loss. All right, let's talk about Pelham, Helena, Alabaster. This is the fluke.
This one's very interesting when we talked about this. I hope somebody reaches out in the comments and says, this is what's going on here, because I'm mind blown.
Yeah, I can't figure it out either. We think it might be new construction, but let's just start with listed. 2023, 123, and in 2024, 127. So it's actually more, which makes us think. Let's go back to we'll circle back on the construction. So more listings.
Yep.
Solds was 109 in 2023. 2024 was 111. And then you go to the medium and the average. So the median sales price, $344,900, and in 2024 it was $330, and negative 4.32%. So every other market and the overall market is in a positive, and I triple checked these.
You double checked it with me sitting here looking at it twice.
Said, what am I looking at? So every other market, sub-market that we pulled out, the appreciation is significantly higher.
100%.
This is a negative. But you go back to the listings, everything is in negative listings except for these pockets. It's in positive.
Yeah.
And there is new construction happening in those pockets.
Because they've got nowhere else. They got no more older homes, and they're just growing.
Correct. So we're summarizing that the supply is not tanking the appreciation, but there's just a significant amount of new construction probably hitting the market in the $200,000 to $300,000 range.
Little garden homes, yeah.
Little garden homes, 3-2s. And that extra supply, because they are in an actual positive. No one else is in positive.
Yeah.
They're in positive supply. These are this new construction homes coming on market, and it's skewing enough of their data that it looks like there's no appreciation.
It's a lot easier to skew when you sell 10 new construction garden homes and there's only 130 something that were listed. That's easy to skew.
Yes, you're at 10% of the market. If they sold 20 or 30,
which is probably more realistic, honestly, the way these neighborhoods are popping up.
So I'm not concerned by a negative appreciation. I think that's what it is in new construction.
I think it depends. If you go in and maybe take out like what it is, like appreciation or depreciation, like per square foot, like you'd have to look at all the different houses and things.
Yeah.
Maybe that's just 3-2 garden homes that are bringing down the overall price. But if you had a 5-4, that's a good estate lot, that's probably positive appreciation. Yeah. I don't think Hoover, Pelham, and Helena I just don't expect them to bring down the actual Birmingham market as a whole. That's just not.
No, overall appreciation, if you were to take, like you said, homes built before a certain date, there would be appreciation.
Yeah, I would concur.
And I could probably have pulled that data. Maybe I should have.
Shame.
Shame on me. All right, last area. And I added this one for this time. So Adamsville, Centerpoint, Roebuck, Graysville.
Yeah, I think that's a good
lot of where our investors.
I was going to say that for what we do, a lot of.
2023 was 130, and in 2024 was 111. So negative 14% in supply.
That's why all my investors are asking where the supply's at right now.
Yeah,
makes sense.
They're like, so you can tell them, yeah, we're in a negative supply, and
I do.
And when making offers, now you can say, instead of just, hey, we need to make an offer this aggressive, you can say you're fighting against a negative 14% supply issue.
Yeah.
So where do you want to be at?
Yeah.
Solds went from 104 to 95, so still trending with rates and fighting rates. So that's negative 8.6%.
Those areas are more affected by that, I think.
100%. And then our median sales price went from 144 to 169.
Wow.
Which is a 16.59%.
That's directly
that
related
is crazy.
To supply.
It is, but I also think it's interesting. This is a theory I have.
Okay.
So in some of these price points, there are mortgage programs and incentives that kick in when times are hard.
Yeah.
So I have sold several properties in these areas. You have a property currently listed. We just put under contract.
Yeah.
A lender reached out to us and said that between lender credits, because they get incentives for they get tax kickbacks for giving incentives. Mm-hmm. So between lender credits and a grant, there was $7,000 that a buyer could use for closing costs,
which is crazy. That's free money.
So in some of these areas, there's incentives to get people new homes, to get home buyers. So that huge jump when everything else is kind of appreciating, when things are kind of tougher, that jump in these price points makes sense to me because of the grants and the lender credits.
They're not as rate
FHA stuff.
Yeah.
I
mean, they are rate sensitive, but there are programs in place to offset those rate sensitivities versus Helena, Pelham, Alabaster, where they're not giving you
not as much.
Yeah.
Right. And so I think that jump from 144 to 169 equates to some of just the demand, the low supply. It's one of the lowest supply of those pockets.
Yeah.
And then the demand is still there.
Yeah.
So
people still want houses.
They got to live. Median days on market, though, is significantly higher, 21 in 2023 and 44 in 24.
Whoa.
And all those other pockets, we were talking sub 10 days on market. So days on market, even with the low supply, days on market. But that happens with supply that's just not that great.
Yeah. My imagination in those areas, that the ones that aren't selling right now are still fixer-uppers.
Yes.
More than carpet and paint.
Yes.
More than likely. For the ones that I've seen since I've been looking the past few months, at least in those areas.
Yeah. So
interesting.
So that's data for this month, man.
Stoked.
Hopefully Birmingham, here we go. I've really enjoyed breaking out the separate markets, the sub-markets, because I think it allows you to make better decisions about the areas that you potentially are looking at for maybe you're an owner-occupant looking for a home in Pelham. Well, now there's actually some increased supply, or maybe you're looking in another area and you should start looking in new construction, because that could be where some of that levy is helping. So
new construction right now, if you can get into it with any of their lenders or anything, that's probably the way to do it. That's where they're offering the most in those areas.
100%. So hopefully that's helpful to everyone out there.
Yeah, I hope so.
Thanks for joining me, man.
Yeah, see you, dude.